Hello, fellow investors. Today, let me show you why Rivian is a buy for long-term haul. Rivian is a startup electric vehicle company. It is a pioneer in an all-electric pickup, the R1T, which was named Motor Trend Truck of the Year for 2022. On November 9, Rivian has embarked on raising capital via IPO, which generated a total cash inflow of $13.5 billion for the company. Before we start, if you find this video informative, please subscribe, like, and share this video to help grow this channel. Thank you, and let's get started. Rivian manufactures three types of vehicles: the R1T, or the pickup truck, which produced 652 units and delivered 386 as of mid-December from a plant with a capacity of 150,000 units annually. Utilization rate is just a minuscule 0.5%. The second product is R1S, or the 7-seat SUV, and finally the EDV 700, or delivery van exclusively for Amazon. However, there is a strong order for R1 amounting to 71,000, while EDV aggregating some 100,000. Using the published suggested retail prices, the amount of pre-order could hit 9.9 billion projected sales for Rivian if it can deliver everything between 2022 and 2023. The aggregate orders can be supported by the existing manufacturing plant in Normal, Illinois. The plant has a capacity of 150,000 units, which can be expanded up to 200,000 units annually. To ramp up production in 2023 and beyond, Rivian has already broken ground in Atlanta for its second production plant with a capacity of 400,000 units. The production will be rolled out by summer of 2022 from its plant in Atlanta. There is also another plan for setting up another plant in Europe, which may be operational before end of 2023. Rivian has reported its first quarter earnings report as a public company last December for a period ending September 30. The result is quite expected because its operation has only just begun. The following are the highlights: small sales of only 1 million, gross margin is negative at 82 million, primarily due to high labor and overhead costs, which is typical for a startup, coupled with an inventory write-down of 157 million. High research and development costs coupled with huge selling and general expenses led to a loss in operation of about 1.766 billion. And finally, an additional loss of about 458 million from convertible notes resulted in net loss of 2.2 billion for the 9-month period ending September. EPS for trailing 12 months stood at negative 25.37 per share. However, notwithstanding the result of operation for the third quarter, Rivian has a massive 20 billion in cash reserves to ramp up production. Its market cap reached 75.4 billion, comparable with GM and Ford market caps. Rivian stock with the symbol RIVN began trading last November 10, 2021. Since then, the stock reached its high of 180 last November 16 and recorded its lowest at 74.7 on January 6. From its first trading day until today, January 12, the stock formed a downtrend channel and is now range-bound between its support of 75 and resistance of 94. From the technical standpoint, the chart indicates that the never sellers are now gone and the buyers are now in control. Should the trend continue, price may breach the resistance of 94 and reach the next resistance of 106. For the upside, the market for EVs is huge at 9 trillion transportation and service market, according to Rivian. With this number, demand is expected to outstrip supply. Second, the company is off to a good start by the first to introduce an all-electric pickup among the giants in the industry. Third, Rivian has a formidable cash reserve to the tune of 20 billion, which it will use to ramp up production and promote sales. Most importantly, The company has the support of Amazon, not only as a stockholder, but of big customers as well. And finally, the pre-order is projected to generate 9.9 billion potential sales, and not to mention additional pre-orders may be coming in from recreational vehicles, rental company, outdoorsy, for a potential 1,000 Rivian trucks. On the downside, the company is faced by production challenges, both from within and outside of the company. The internal challenges include hiring and training of production workforce, equipment bring up, and not to mention the global supply chain, tight labor market, and resurgence of COVID. Another major downside is stiff competition as Tesla, GM, and Ford are also coming up with their own EV trucks soon. Rivian has been trading for the past 62 days since its IPO. It has reached a high of 180.22, low of 74.70, and is currently trading at 85.41 as of January 12, 2022. Analysts are expecting a target price of low of 94, average of 135, and a high of 170. Should you buy Rivian at the current price of 85.41, the potential return is 10% for the 94, 58% for the 135, and double your money if it reaches 170. Using risk-reward ratio analysis, if you use 70/70 as the stop loss, at 94 it is 1:1, at 135 it's 1:5, and at 170 it's 1:8. Remember, the main issue of Rivian is not the demand side, but the supply side. The best approach here is playing the long game via dollar cost averaging method. Say if you have $1,000 to invest 25% upfront, 25% after every quarter. Your quarter should be after Rivian reports quarterly earnings, because it is then that we have data on the progress of the production, which is the key element for its success in this business and for the stock to skyrocket. I hope this helps you in your investment decision, and see you again next week for another episode of Individual Stock Analysis. Thank you.